Let's get back now to our market guests, Anand Tandon, Devang Mehta and C.K. Narayan join us on the show this afternoon. Good afternoon to all three of you. Mr. Narayan, if I can start first with you, to get a sense of what you make of the activity we've seen in the markets the last 2 days. Yesterday there was a recovery move. Today it does seem that we're a wee bit weaker. And of course tomorrow will be expiry. What is that telling you about where we'll end this series and what it means for the next series?
Well, I think the way the market has rallied over the last few sessions, the minimum expectations on the upside rally has more or less been met with the rise into about 8360, 8370 levels on Nifty future. This accounted for what on the technical side we typically expect as a 50% retracement of the fall. So therefore the minimum has been met, and there has not really been any follow-up, let's say, positive events or positive news flow which could keep this market going further. At the same time, oil, which has really been at the core of all the trouble in the last week or two, has not really got up from where it was. So I think so long as oil doesn't get up and start making strides on the upward side, I think the market will remain a little tentative. And with a lot of roles having got facilitated, I think we may have more or less done with the rally. At the most, we might have a peak somewhere close to around 8400 if it were to challenge it, but I wouldn't put too much money on that. I think tomorrow we might probably be a reflection on how the rolls have panned out. We should probably get the data on that by today evening. If the rolls are not very smooth, I think I would expect some VWAP-based selling to emerge towards the end, which would probably spoil the party for buyers.
Anand, thank God the FIRs have gone on holiday. They sold a quick $1 billion in 9 days before they left. But what do you think they'll do when they come back? Will they come back as continue to be selling, or will they be buying? And what will determine what they do?
Well, I wish I had the answers to all those questions. But the reality is that, there is not, the incrementally from here, the news flow may not be that positive. There is not that much happening on the local economy. And, we have begun to see that, the dollar moving up the way it has started to put pressure on dollar carry trades. And till the yen investors come in and replace them, I think there will be continued volatility in emerging markets, particularly India. So as CK was mentioning just now, I don't think that there is anything right now in the market which is going to help you determine the trade. Earnings are not particularly great, so it may get a little heavy from here. So don't be surprised if you see a bit of a fall from now on in January.
Gentlemen, don't be surprised if we cut out of our conversation in a few seconds from now, because I think Amit Shah is about to address the media on the election results of the day. But till he doesn't start, I'm sure we can continue talking markets at this point in time.
Okay, let's do that. CK, if you said that the rally is over, in that case, or could be getting over, in that case, what's the risk of this market going back to 7960 and breaching that, which as of now we believe could have been the bottom?
Well, see, it's all depending upon what the market is trying to correct, how much of the rise it is trying to correct. The rise has been going on for quite some time. What we have corrected in the fall down to near 8,000 was the most recent swing, and we corrected it down to a little more, say around 70-72% of that particular rise. So in terms of price, if you are just correcting that last leg, then we are more or less done with the low. But if we have formed, let's say, a more significant top at about 8660 on the futures, then the correction would actually aim for correcting a larger piece of the action, which would then probably take you to a lower low compared to what you have seen. So I think that would largely depend upon fresh triggers to emerge from outside of our country, because I don't think there's anything which is local which can trigger that move. So I would keep a very close watch on how the dollar behaves and how oil behaves, and would take my cues from that. If those two, let's say, asset classes are not going to help us along, I would most certainly think that the low that we formed in the last week was not probably the ultimate one.